What's going on? Let's get right into it. See, with this strategy, I wanted to find the most optimal entry to where you could get the most highest part of the trend, so you could get the highest risk to reward possible. So with the simple Forex strategy, it's a really simple way to get these high reward strategies. And it works by having a really small stop loss and a really big take profit, because we're entering at the most optimal point in the trend. So we're actually taking a nice little reversal of the smaller trend. Like, so if the trend is this whole entire long trend going on here, this bigger time frame trend, like if we jump to the hour, we can see we're in this big downtrend. We're trying to find the most optimal entry within this really big downtrend. So that is how you enter the best way possible. Now, how do we actually do this? Today, I'm going to show you everything you need to know from the very beginning of actually entering your trade to the very end of exiting your trades. This video is a little bit more in depth than it usually will be. This is for people who want to learn a little bit more about the simple Forex strategy, because I know I can talk really fast and go over the topic super quick. So today, I'm going to show you a little bit more in depth, all the way from looking at the charts. I'm going to show you exactly what I do personally. So let's get into it. Okay, so first thing I will do before taking any trades, I have all my pairs lined up on the side here, and I'll just click through them. And what I do is I go on the 4 hour, and I want to see where we're headed on the higher time frames, because the high time frames are very important to me, because we are only trying to take a bite out of this long-term trend. So like right now, we're in this huge trend here on USD CHF. We're clearly trending upwards. So like, how do we capitalize on this? How do we enter in areas like this? Like, how do we enter in these bottom of the areas? That's what I'm trying to look for. So I will go on something like the 4 hour, and I will draw a nice little line like this, just to kind of show me what's going on overall, right? And as you can see, we're clearly at the very top of this trend right now. So now would not be a good time to enter, but if price started to come back here, this is where I would be looking to take an entry somewhere around here. But I don't just enter as soon as price comes down here. This is where the strategy is really important. That's where it comes in. So then what I'll do is I'll jump down to the 15 minute, and I'm going to the 15 minute because I'm trying to capitalize on a higher time frame, move, but then I jump to the smaller time frame to look for the entry. So that's really important, because a lot of people were saying you trade reversals, like you should always trade continuation. No, I am actually trading continuation, but I'm trading the reversal on the smaller time frame, because no matter what, price will always be reversing, or will always be continuing no matter what. So for example, it might be reversing on the 15 minute, but then on the 4 hour, it could be in an uptrend. See, that's the thing about Forex, is there's constantly something happening on each time frame, right? Because here we're clearly in a continuation, but then when we're on the 15 minute, like there was a reversal of the trend here. Price was going down, and then we had another reversal, and now price was going up. So it's really important to me to look at these higher time frames to figure out what's going on. And then I'll jump to the smaller time frames to actually take the trades. So how I came up with this strategy is I had to ask myself, like, what makes a trend reverse? I had to figure out what makes a trend reverse. So I just jumped to something like the 1 hour, and I look back in history, and I'm thinking, what is a clear sign that trend has reversed, or is starting to reverse, right? Because you can see where the trend reverses. You can see there was a trend reversal here. You can see there was a trend reversal down here. You can see there was a trend reversal that happened here. You can see there was a trend reversal that happened here, right? Each time there's a new direction, because we were up here, and then we were down here, and then we were up here, and then we were down here, right? So I had to ask myself, like, what was the clear sign that the trend was reversing? Like, how do I know for sure that the trend was going to reverse? And this is when I added the MACD. So here are my MACD settings. I just have the colors all the same. Took off the MACD and the signal. And the inputs are all just standard, basic, the default. So I realized, this is before I even added the MACD. When I was even looking at the MACD, I realized trend would reverse when price broke a significant low. So in this uptrend, I noticed, okay, when price broke this significant, area of structure here, this low here, and we clearly see it broke, price moved down after that. And then the same thing with the uptrend. Okay, here was a significant high on the downtrend and significant structure. when price broke that, it kind of kept going up. So then this is when I started realizing, catch on, that this is a clear indication of reversal. So then I started trading these reversals and I started to become profitable. But then I was like, how can I optimize this strategy to make it the best possibly be? So then I was like, I need to find optimal entry. And then how do I find optimal entry? Well, then I did the same thing. I studied the charts for hours and hours trying to figure out where price comes to after. So I noticed, when price broke these significant structures, price somehow always ended up pulling back a little bit. But then I was trying to figure out, like, where does it pull back? Why does it pull back? What is it doing? This is what the things we need to figure out. And I'll get more into that in a minute. If you're looking for a great broker to use, I highly recommend using HangoTrade. They have leverage up to 500 leverage and spreads as low as 0 pips. If you want to sign up with HangoTrade, my link will be down in the description below. So yeah, after I figured all this out, I was like, this was the light bulb moment for me. Because I stopped watching YouTube videos, I stopped watching other people's stuff, and I just kind of took moments to look at the chart and just study it and look for why things happen. Because there was clearly, all these reversals constantly happening. And it was my job to figure out why and like what made these reversals happen. So for example, and this is something I learned too, right? Because we were in this clear downtrend here, right? And let's say we didn't see this. It was important for me to learn what true highs and lows were, because here you might think this is breaking this high, and then you might think, okay, I'll enter right here, right? Like it's pulled back a little bit, I'll enter, put my stop below there, and then you might get stopped out. Like luckily there we never got stopped out, but sometimes I was getting stopped out, and this is where I had to add the MACD to confirm where the true highs and lows were. So for example, in this trade, this was all one big high here, so we couldn't actually enter yet, because from here, from this green side of the MACD to this green side of the MACD here, this whole section was price creating one singular high. So you take the highest point, which would have been this candle right here, and now this is our area where we wait to enter. So how the strategy works is we now wait for price to break above that last high, and now this is our signal. Okay, now we can confirm that price will continue into an uptrend because it has broken the last high. Okay, cool. Now we know, like I said earlier, price always somehow pulls back into some liquidity. So now it's our job to figure out where price will come back into. So I always say there's 3 areas that I look for price to come back to. I look for price to come back to significant wicks. So there's a big liquidity wick right here. I look for price to come back into order blocks, so an area like this. And then I also look for areas just of general consolidation, things like this where price was stuck in that little sideways movement here. And then I take all 3 of those out, kind of take an average of them, and let's say if I were to take an average of the 3, it would be somewhere around that. So then I can delete all these other zones, and then this will be the area where I want to enter. So you could either enter at the top of it, you can enter in the middle, you can enter at the bottom. But either way, you have to have your stop loss, a good amount away from these possible areas. So something like that, and then have my take profit either static or dynamic. And I'm going to talk about that later. But for now, we're going to have a static stop loss right up top here. So then price comes back, pulls into some liquidity, and then comes straight up into some profit, and then we'll see, we could either get stopped out here or price. Yeah, so we got stopped out here. Obviously our take profit wasn't in a good position, but you can see how price pulls back into the liquidity and then goes up a little bit. And then the same thing just happened here, right? There was a new uptrend that was formed, and then price broke a significant low. So for example, this was our area here of a low. Price broke below that, kind of pulled back up into some liquidity, and then is now doing the opposite, right? And I'll explain that one more time real quick. Price broke, right? Price broke our previous high here with these wicks, or sorry, with these candles. And then as you can see, price pulled back up into liquidity. So this is once again where you would look to enter and have your stops nice amount away, and then have your take profit wherever you choose to take it. But let's say we took it there, and then price will continue to do the opposite again and again and again. And it's a repetitive cycle. This is why you can make money off of this. Same thing happens again. This was our last high here. And then let's see, we have some significant liquidity going on here. And as you can see, price already actually broke above and then pulled back into some liquidity. So you would have entered somewhere around there. But anyways, you understand. We're gonna look at more examples. Okay, so from step one all the way to the end, we're going to show you exactly what I do. I'm going to show you everything from the very beginning of looking for your trade. So like I said, when you're looking for your trade, you're going to look at the higher time frames, like the 4 hour. You're going to get an overall direction of where you think price is headed. Okay, so clearly price right now is trending downward. So that means we're going to look for sells. We're going to look for sells because sells equals price is trending downward on higher time frame. So sells because price is trending downward on a higher time frame. Okay, so then we go to our lower time frame, the 15-minute. And now this is where we're going to look for sells. Okay, so price has come back up, so this is a good opportunity for us to look for sells, because now, right, remember we're trading a reversal on the lower time frame, because now we have this uptrend that's going on. Okay, sweet. We have an uptrend going on. This is what we like to see. So now we can trade the reversal of the higher time frame. And as you can see, price almost makes this pinch that's going on here. You call it like some sort of pinch or something like that, right? Because price is getting squeezed into this corner here. So eventually price is going to have to either push down, or price is either going to have to break above here. So we have two options. So then when we go to the 15-minute, we wait for price to see what price does. And now while price is, you know, squeezing into this corner here, it's going to either have to do two things. It's either going to have to break this high, which means price will most likely continue up, or it's going to have to break a previous low, which is this low here. So now we have two options, and since we're looking for sells, we want to see price break this. So this is when we can do something like we can set an alert here. We can add an alert here for price to break this area here. And then when we see that price is broken, this is when we look to enter our trade. So as time goes out, we see price starting to break this area. Okay, this is cool. This is what we want to see. So now price has broken the previous low. And now what are we looking for? We're looking for price to come back into liquidity, right? So we have a lot of wicks going on here. We have a lot of wicks there. We have a lot of wicks here. Order block would be this area here. And just in general, we had a lot of consolidation and resistance going on in this area. So these are all areas that price could come back up to. And then once again, we can just take an average of the entire area, something like that. And now this will be the area that we look to enter. Boom, boom. Okay, so now this is our section where we think price will come back up to. So we can set our limit there, and then we can keep our stops nice and above. Let's say this top here. Cool. So now we want to see price pull back into our entry. If it doesn't pull back, it's okay. We'll get the next trade. You got to be patient. In the markets, it's very all about patience and just waiting for the perfect trades that you want to see happen. You can't be greedy. You can't be constantly jumping in, trading this, that. You have to make sure you're trading the trades that you want to see, right? Okay, now there's two types of ways for you to exit your trade. So first, we're going to see where price comes back to. Boom, just like that. Price has come back and tapped into this liquidity zone here that I marked out. As you can see, price never really came above, But anyways, we still had a stop loss nice and high above there just in case. So there's multiple ways you can exit your trades. Now this is where a lot of people struggle. There's two types of ways. There's a static entry and a dynamic entry. So there's two types of ways that I like to do it. Sometimes I like to have a static exit. Sorry, why did I put entry? I don't know why I put entry. Exit. Static and dynamic exit. So there's two types of ways. The first way is static. This is just setting your take profit to one place and never moving it. If it hits it, it hits it. If it doesn't, it doesn't. So this is good for, you know, if you're taking a trade over the night, if you don't want to look at the charts, if you don't have time to like sit there and monitor your trade constantly. This way is really good. And with this type of, you know, static trading style, you should always stick to a similar take profit. You shouldn't really fluctuate it too much. Like one day you shouldn't have it a 1-to-1 and then all of a sudden like a 10-to-1. It's going to be really inconsistent, and then you're going to lose. And you'll learn over time what's a good amount to have. So you could either base it off of the previous like lowest low, so you could set it there, but then you only have like a 2.25, which is fine. If you think you can, you know, pull off something around a 1-to-3 every time, you can do that. I'm sure it's totally possible. You can always look at previous history, see the low here, and then base it off of that. That's very possible as well. Okay, cool. So, you know, that's a static entry. You're not going to move it. You're not going to do much. Now, a dynamic entry is very different. This is where you're constantly going to monitor what's actually happening in the charts, and you're going to look for signs of reversals and signs that price will not continue. So I like to exit dynamic most of the time when I can. A lot of the time though, I will do static if I'm trading overnight and I just want to leave it, set it and forget it. But dynamic is really good because you can have the trades go on for a really long time, or you can exit out of the trades really fast as well. So there's multiple ways that you can dynamically exit your trades. You can look for signs of reversal. So for example, I'm in the trade and I could say that, you know, if price breaks above here and closes, I'm going to exit the trade, right? So then we see price come up. Okay, so we've seen a lot of resistance. See, price isn't really closing above here. So, you know, if we see, you know, a significant close above this area, then I will close my trade. But as you can see, price never closed above here because we had this structure going on here. And if price wanted to continue going back up higher, we would see price close a nice big candle. Like let's say this wick wasn't a wick and it actually was a close, something like that. If price closed up here, I could see price now coming back up to this area here, and then we'll start to be a negative drawdown. We will not want to see anything like that. But since we never saw that, and price now has clearly made this huge bullish candle, to see it's all these little like signs here and there that really tell me what's going on. It's adding to the story. Forex is this book, is this language, and you have to understand the little moves, every little candle has a little detail to the story to tell what's going to happen next, right? Obviously it's not picture perfect, but as you can see, we have these two very, very bearish candles here. So that tells me I can stay in the trade, I can go even further, and especially because we broke this previous low and closed above it with that much, I know it's going to keep going. Obviously, we're going to have a little bit of a pullback, which is fine. It's totally fine to see that. And now I can do something like this. Okay, if price, you know, breaks and closes above this last kind of high here, then sure, I will close my trade. And once again, we're starting to see price make new lows again. Price now has broke that and keep going. So we could just keep going. Very, very bearish still. Now this is our very, very low from like previous history. So this is going to be an important spot for us to see. Obviously, we're going to have a big push off of this. We could even probably break this area here, which is fine. So I probably wouldn't want to see price break that far up past there. Okay, so as we can see, we have some reaction off of it, but not much reaction, which is very surprising because this is a significant low here, especially from previous history. And since price just broke through that without even really much effort, it looks like. And especially all this bearish momentum still, that means I can probably keep holding this for quite a bit. So we might see price come up here, tap into that, and then move down. And that's okay, I would like to see something like that. But we're still seeing price, you know, start to trend downward still. But here now, this is an area I see where I might look to exit, because now we're having, it looks like some sideways movement. And usually when you have sideways movement, you're gonna have a big push up because price is flattening out. It's kind of hit its bottom. Right here, you know, we're trending a lot, but now price looks like it's hit its bottom. And now we're actually starting to see a reversal movement here, because this was a significant low here. Price broke above it and then came back into some liquidity here. So this could signal that we might have a reversal going on. So I'd probably exit my trade right now. Exit my trade there for a nice 9.26 risk reward ratio. And that's exactly how I dynamically exit my trades. And the more you trade, the more you'll start to see these little signals, and you'll start to catch on and realize why price will end up reversing, why it will keep continuing. It takes some time to learn. I'm going to go more in depth eventually when I release a course. But yeah, I'm just going to talk about the little things that I've learned over the years that tell me what price will do next. So yeah, that's pretty much it. If you guys have any other questions, let me know in the comments.